Hi, this is Suzanne Long, Professor of Accounting at Jackson College. Today we're going to get started with a Chapter 1 video practice problem. This is a transaction analysis problem focusing on personal accounting. So we'll do this problem with personal accounting, and then in Chapter 2 we'll look at business accounting and how that changes things a little bit. If you haven't watched Suzanne's 6 T's, you'll want to do that first. And that one looks like this. So you'll see the 6 T's over here, and I'll talk all about the accounts and how the accounts work. I'm going to call that one, that's kind of like ground zero or chapter 0 or something like that, but you want to do that one first. We'll do some review of the accounts as we're working on this problem along the way. So up in the corner you'll kind of see my little heading about this problem. If you are in one of my classes, you'll be able to follow along specifically with your textbook, but you don't have to be in one of my classes. Everything you need to know is over here on the left. Opening balances, transactions, and directions. And then we're going to be building the accounts right here. Left and right, increase, decrease, depending on the account, all that good stuff. And this is me over there. This is a classroom at Jackson College. I remember being in a classroom. Right now it's COVID time, and no classroom. And I often use the area over to the right for notes, and I encourage you to do the same. And remember, the area to the right just keeps going and going and going and going. So there's no limit to your notes and what you can add for yourself in the space over there. All right, let's get started. So we're gonna look at these opening balances first, and we're gonna drop those in, and we're gonna look at what is this? Who is this? This is a person. We're doing personal accounting. So this is a person, and this person owns cash, which is a bank account, like a checking account, prepaid insurance. So that means this person paid up front for their insurance. Maybe they paid a year in advance and they got a deal or something like that. This person owns a car, and this person has a boat. I want to be friends with this person. This is Elaine, so I want to be friends with Elaine. Elaine has a boat. Liabilities, what does she owe? She's got some unpaid accounts. That's like credit cards. She's got an automobile loan, car loan. Yeah, like most of the world. Notice she doesn't have anything else. I don't see house over here and mortgage loan. That would be very common for a person. That's what we're doing, personal accounting, personal balance sheet. I don't see that. I don't see mortgage, house and mortgage. I also don't see note payable. And a lot of people have something like a note payable. And businesses for sure will see note payable. Down at the bottom here, net worth. Remember our equation. Maybe I want to put this over here. I'm going to add my notes right here. Remember our equation. Assets equals liabilities plus equity. So I'm wondering about assets. What do we have in assets so far? What do we have in liabilities so far? What do we have in equity so far? So I am going to do a little playing around with these opening balances. So that's what we've got for this person for the balance sheet. Let's check out this person on the income statement. This person has revenue, like they have a job and they're earning money, so we're going to see that here. And we've got some expenses. So just various expenses. I don't see rent. So this particular case is an interesting one. Who is Elaine? She owns a boat, she doesn't own a house, and she's not renting. Okay, let's get back to those opening balances and get those in. So this is what's given in the problem right here. That's what you're going to see. Bam, here's your opening balances. And you have to know what to do with them and where to put them. So like we've got cash, $34,000. We come over here, cash, Who has $34,000 in the bank? Who is this person? Opening balance, $34,000. Notice that it says opening on the left, so that's kind of pulling you to the left side. It says increase on the left side, and there's a plus sign on the left side. So all of those things about the setup of this problem are pulling you to the left side. But again, with the 6 T's, I really just, I want you to know that. I want that to become more and more familiar as you work with accounting and study accounting. Assets increase on the left side. So as we're working this problem, you're going to be practicing that skill. Assets increase on the left. Prepaid, that's another asset. So we've got 3,500 over here. Automobile, 45,000. What? What kind of car is this? Boat, 81,000. Oh my, I definitely want to be friends with Elaine. So in terms of being complete, there are 4 asset accounts, and they now all have opening balances. They may or may not. I mean, you could be working a situation where you've got an account set up, but it's going to be added in the current month. Or maybe there's a blank space, and then you need to add the account. So, but in this case, we kind of match right up. 4 accounts, and we've got them all in. Some people like to do like a little, something like that. Like, yep, I've got those all recorded, they're all in. Some people like to throw some color on here. You could make it bold. If you like to do that kind of notation, go for it. Okay, let's see what else we've got. Unpaid accounts. Unpaid accounts, 21,000. Okay, that's over here. And the setup is pulling us to the right side. Unpaid accounts, liability, increase on the right side. So we got that one in. And we got another one, automobile loan, 25,000. And maybe just take a little pause here. Assets increase on the left, liabilities increase on the right. Yep, they offset each other. So this whole thing is a self-balancing system. It was popularized in the Renaissance period, but it was going on much longer before that. It's just, we had the printing press, and more people were literate and communicating, and this is the system we still use, this self-balancing left-right system. We happen to call the left side debits, and we happen to call the right side credits. Those words go back hundreds and hundreds and hundreds of years. The fact that we now call things debit cards and credit cards is more complexity in our modern time. But the accounting system, left, right, debit, credit, that's all, that all goes way back. Debit, left side, credit, right side. We're going to see that more and more as we work with accounting. For now, maybe just think left side assets, right side liabilities. Think of this equation. Assets, left side of the equal sign. Liabilities, right side of the equal sign. Equity or ownership is also right side of the equal sign. So down here, net worth is also going to be a right side account. And net worth is over here at 117.5. Now before we actually work the problem, I'd like to play around with these opening balances. This will just take a minute. So we've got everything in. We're done with the opening balance section. We are ready to work the problem. I would like to take a minute and just do a quick check. What is the total of these assets? And I'm going to use a formula. Equals this one, plus this one, plus click, and enter. So my assets total 163.5. And you can see my formula up here on the formula line. I did equals click, plus click, plus click, plus click, enter. Of course, you could type in the numbers equals 34000 plus. You could do it that way, but that takes longer. Liabilities equals click, plus click, enter. Equity, I'm just going to do a cell reference, equals click, enter. Okay, so there's my opening assets, opening liabilities, opening equity. Now let's work the formula. Assets is the left side. Now I want to see what's liabilities plus equity. What's this one plus this one? I want to see, yeah, we balance out 163.5, 163.5. Assets equals liabilities plus equity. If you ever happen to be working a problem where they give you all of these opening balances, but they don't give you net worth, net worth is just a question mark, well then you can do this kind of thing. You you can work through, okay, what's assets, what's okay, I can find the difference. I can calculate net worth or ownership, equity if I need to, no problem. All right, let's take a look at the transactions. First one, purchased fuel for the boat with cash. Purchased with cash. Purchased what? Purchased fuel. So there's a couple of, like key words in there. I would say cash is a key word. I would say fuel is a key word. Maybe that would look better in red. Maybe I'll try red the next time around. At any rate, there are some kind of trigger words or red flag words. There's some helpful words in there. Purchased fuel for the boat with cash. Okay, there's cash going on. And most of these transactions that we'll see are going to have cash. So you can come to the cash account and you can say, okay, is my, or this is Elaine. Is Elaine's cash account increasing or decreasing when she buys fuel? Which way is it going? Is somebody giving her $85 or is she paying $85? And you say, oh, well, we're paying $85. So, okay, yeah. So we need to be on the decrease side. And then there's this little space right here. That's for you to do, and I'm probably going to have to do an apostrophe. I'm going to type $1. Oh, I'm good. And that's to identify this transaction. I want to see number 1 is 85 on the right side, decrease to cash. I also noticed some of my formatting went away. That's all right. But you can change your formatting. If you want this 85 to look like, the other number, that would be currency. You could do those kinds of things if you want to play with your file a little bit. Okay, we got half of it. Now I need the other half. Purchased fuel for the boat with cash. Okay, so we got the cash part. Cash went down. It decreased by 85. Decrease on the right for an asset account. Why? Why did cash go down? Oh, well, it was because we got the fuel. We got gas. So we want to come over here and record gas. So that's going to look like this. That didn't quite go right. There we go. So we've got fuel expense recorded. Record fuel expense. Increase fuel expense. The expenses are generally just going to be increased on the left side. It would be really rare to have a decrease to an expense account. An expense account, increase left side. So for recording an expense, it needs to be left side. These guys are all pretty much just going to be left. I suppose if you had an error or something you had to correct, you might end up over here, but left side, expense, record. So for number 1, I can see left, right. And that's what you've got to have. And that's why these numbers are important. I see number 1. So for number 1, I've got a left side and a right side. So I'm good to go. I balance. If I want to check that one off, maybe I could do that, something like that. So we're done with the first one. Let's look at the second one. Earned, let me be here. Earned $12.50 in wages, deposited in a bank account. So I'm pausing because it's really important that you read this. And of course you can read in your head and you're thinking it through in your head. It's even better if you say it out loud. Who cares what people think or where you are? Say it out loud. Earned, wages, and deposited. So I would say the key words here would be earned and deposited. And I'm just playing around with the color. Yeah, I think the red looks better. Earned, deposited. Deposited. And this is cash, right? We got paid. Yay, Elaine got paid. She got paid $12.50. It's an increase, right? Cash account, checking account. Yes, she got paid. So we're going to we're not going to she's not paying somebody else. No, she's receiving cash. She got her paycheck. By the way, a $12.50 paycheck doesn't seem to support some of this other financial behavior, but okay. Deposited in a bank account. Yeah, increase cash. earned. Then we need to do something with the word earned. So this is a personal financial statement, personal accounts. Earnings are going to go right here, revenue. And we're going to make that a number 2 also. So we've got number 2, number 2. We got a left and we got a right. We balance out. I want you to just take another look at those first 2 while I'm playing around here. I can't remember now what I did. Yeah, okay, that's good. Yeah, I think I like the red. I think that pops out a little better. All right, moving on. Let's take a look at 3. Purchased groceries on a credit card. Purchased groceries on a credit card. Okay, groceries is important because that's what we got. And I would say credit card is important because that's how we're paying for it. Notice that this one is not cash. By 400, what? She made $12.50, but she's spending $4.20 on groceries. I bet you there's more than food in that grocery cart. What do you think? But I want you to see is this one is not cash. It does not say paid, and it does not say the word cash. It says purchased, and I want you to compare and contrast number 1, purchased with cash, versus 3, purchased on a credit card. They're both purchases, but one was with cash and one is not with cash. This one has nothing to do with cash. There's no cash going on right here. Maybe that's why she spent $420. Okay, at any rate. So you might be feeling this one, maybe, and it doesn't matter which side you record first. I'm going to go with groceries. Let's do groceries first. We've got grocery expense, and we don't have an account called grocery expense. We do have an account called food expense, so that's where this is going to go. And this is number 3, right? So we've got, I'm doing air quotes right now, food expense. I'm thinking there's more than just food in there. That's the left side. What's the right side going to be? How do we record credit card? Credit card's going to be right here. Unpaid accounts. $4.20. So we've got number 3, left side, right side. She already owes $21,000. And we're just going to add on, we're just piling onto that debt. Now she owes $21,420. Now she owes more. Hey, when we get to the last step, I'll talk about these totals, how to do some auto sums and things like that. So purchased groceries on account with a credit card, unpaid accounts. This could also be called up here, you could call it credit card liability or credit card payable. So there's definitely some flexibility on these account titles. Let's look at number, let me check it off. Let's look at number 4. 1, $200 cash from a lottery. Now it's not so bad, is it? Maybe try it. Maybe you don't even need anything from me on this one. So we got cash. Cash. Are we increasing receiving cash or decreasing paying cash? 1, increase. Why did we get cash? We won lottery money. It's not a liability. We don't owe any money. This is a revenue kind of thing. It's like this one is salary revenue, working my job, earning money revenue, and this is won the lottery revenue. This is earned $12.50. This is won $200. One. That's a dangerous word in an accounting class. W-O-N, one. Yeah. Oops, that's not where I want that. There we go. Okay, number 5. Paid cash for credit card bills due. All right, that shows over 21,000, I guess. 3,600 is something. Okay, paid. Paid is a trigger word. Paid means negative cash, decreased cash, paid. I've had interesting conversations with students in recent years about the word paid, and it's not clear. If I go to, the gas station and I go in and I pay for a 20-ounce Coke, I paid for that Coke. I gave cash. I am decreasing cash to buy the Coke. Paid. So I just want to make sure it's clear. Paid cash, decreased cash. Decreased cash, paid cash. Why did we pay cash? We're paying towards our credit cards. We're paying towards this balance that's due. So we come over here to unpaid accounts, and this is where we're increasing, over here, sorry. This is where we're increasing how much we owe. This is where we're decreasing. So this is where the 3,600 goes. And it happens to look kind of goofy because they're right next door to each other. Number 5, here's the left, here's the right, and what do you think about that one? Decrease how much we owe. Decrease cash to do it. I'm just going to get rid of this because we're going to have to fix that. We're going to have to play with the totals when we get done. This one too. I should probably get rid of all the totals. So we're decreasing what we owe. We're decreasing cash to do it. So it's 2 decreases. Decrease the asset account. Decrease the liability account. So when you're doing transactions, it can be increase, decrease, decrease, increase. I mean, it's whatever it is to record that transaction. You have to have a left side and a right side that balance out. And you can have as many numbers on the left and as many on the right as you need to record that transaction. You just have to balance out. Left side has to equal right side. All right, let's take a look at number 6. Paid, trigger word, paid. Paid what? Paid interest. So with red, I'm just kind of highlighting certain words that jump out, that are helpful, that are going to help you figure out how to record these and which accounts to choose. There's definitely something about accounting that's almost like learning another language and translating. So some of my commentary right now and some of these suggestions have to do with that translation. All right, paid. Okay, we know paid means paid, decrease cash. So maybe that's the easy side. Maybe cash is easy. Sometimes I joke cash is Trump, but that was before Trump was elected president. I mean Trump like euchre, because I'm from Michigan. Cash is Trump. Cash is often in the transaction, increase or decrease. So this one, paid cash. Yeah, so you might be feeling the cash first. If you do, like, hey, this one's got a increase to cash, or this one's got a well, get that in there, and you've got half of the transaction figured out. So we got paid $360. Okay, we got that in there, and now we need to record interest. Interest is going to be over here. We are recording interest. So we want to increase interest. Record it. Increase it. And I don't know if these are going to fit on the same screen, but maybe. Barely. So here's my left side, and here's my right side. So yeah, that one's good. Number 7. Booked a flight on credit for $900. again, pause. I want you to read that. I want you to think about that for a minute. Booked a flight on credit for $900. I wish this was worded just a little bit differently. I'm going to add a little something to this. I'm adding the words and traveled. So I'm going to highlight their word, flight, and credit. Booked a flight and traveled. So what I'm adding there is I'm clarifying, not only did we book it, but we took the trip too. So who is this woman, Elaine? She's flying around. She's got this big fancy boat. She got $34,000 in the bank. Who is this person? Booked a flight, and she took the trip. And you know, this is realistic. This is like I went online and I found the flight I wanted, and I used my credit card, you know, to pay for it. I did it all online. It's not like I don't even know if you could pay cash for a flight. I can't even picture it. But yeah, this is not cash. So booked a flight on credit. So whichever one you kind of feel first, you could take care of the credit part first, or you could take part of the flight part first. Doesn't matter. I guess I'm going to go in order. Flight. Booked a flight. That's going to be down here. Travel expense. 900, number 7. Booked a flight. I traveled. Travel expense. Credit. Credit card. Unpaid. I have not paid for this yet. She has not paid for this yet. Elaine. Trust me, this is not my situation. Do we have a left and a right? I'm not going to be able to see it all on one screen. Left. Right. Good to go. All right, last one. Recognized 1 month of car insurance used up. Oh, I love that they did this because this is actually an adjusting entry. Recognized 1 month. Okay, insurance is really one thing, and used up is really another thing. I'm going to add a little clarification there. Insurance, and it was used up. What's going on with insurance? What are we talking about used up? What's all that about? Well, remember when we first started talking, we had this prepaid account? Like this person paid for their insurance up front, which is possible. Get a discount. So that's the deal here, and we're going to see this with businesses also. So this is also kind of a like warm up to when we get to business accounting. Recognized a month of insurance and used up $350. And we have 2 accounts here. We have prepaid insurance and we have insurance expense. We need to show insurance expense of $350. Recognized 1 month of insurance. That's this. $350 of insurance expense for this month. And then over here, we're going to show the used up. We're decreasing this prepaid. Used up, or it's going down. And let's fix this total. So we've got equals this one minus this one. So we're going from 3,500 down to 31,150. Excuse me, 3,150. That prepaid is going down just a little bit. Left side? Where am I? Left side, right side. Balance. Yes, done. Okay, we did opening balances. We got them all in there, and we did a little extra bonus thing to sort of test those opening balances. Transactions. Yep, we got them all analyzed. We got them all recorded in. And now the last thing to do is to finish everything off, to do the final totals and calculations and all that. So I'm going to go through how to total each account and then how to do these totals here at the bottom. And then I want to do some of this too. Make sure our equation is working all right. Okay, and I mentioned that I started with another file, honestly, and so I thought I had cleared everything out, but there were a couple formulas hanging around. Okay, let's look at cash. Cash is going to be the most challenging account to get your ending account balance total because it's where you've got the most activity. So that makes sense. So left side increase, right side decrease. So we're going to do equals, plus, 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 minus, 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 and enter. And it said false, right? So in Excel it's like, sorry. Up here it says custom. It should say currency. Let's try it again. Plus, plus, minus, minus, minus. There we go. It gave me 2 decimal places. I don't really want 2 decimal places. Right here I can play around with my decimal. And if I look at this, 31,000 seems reasonable to me. I'm adding a little bit, a little more than 1,000. I'm taking away a little more than 4,000. So, and you could do it again. I mean, you could test yourself. We're going to test the whole thing. So, this one equals this minus this. Yep. Automobile. We didn't change that one at all. So I'm just going to hit equals, enter. Boat. We didn't change that one at all. Equals, click, enter. So those are the assets. Down here we need total assets, so I'm going to have equals this one, plus this one, plus this one, plus this one, and enter. So that's my total assets. We're done with this column. Let's head over to liabilities. Now, liabilities in these totals feel uncomfortable for a lot of people learning accounting. So remember, liabilities increase on the right, decrease on the left. So what we just did with cash, we're going to do the same thing. We're just starting, we're basing everything on the right side. So we've got equals this, plus this, minus this, 18,750. Automobile loan. What's up with that? She didn't make a car loan payment? I'm telling you, this is a goofy one. So down here, liabilities, I can say it's equal those two. So we got this one plus this one. So I've got my assets and my liabilities. Net worth is the difference. Assets equals liabilities plus equity or plus worth. So equals this minus this. 116,835. Huh? Look at this. So I'm going to hold off on this. I'm going to show you how this all balances out. So those would be our final answers. Total assets, liabilities, and net worth. And this is pending. We're not done with net worth yet. Okay, so assets are done. Liabilities are done. Let's cruise on over to the income statement. Revenue, we've got these two to add up. You could do an auto sum, or you could do equals plus. Auto sum, click where you want the total, click auto sum. It's telling me what I want, but you could also click and drag what you want, enter. You could also do a plus formula. Entertainment expense. Guess we didn't have that, did we? Okay, so 0. Groceries, yep, I remember that one. Gas for the boat, yeah, 1 month of insurance. Little interest and travel. Yep, okay, I remember those. So now at the bottom here, we're going to do total revenue equals, click, enter. That's a cell reference. Expenses, we're going to do some adding. Yeah, why not? I'm going to be complete. That one, plus that one, plus that one. Click, plus, click, plus, click, enter. And pause. This does not happen a lot with these practice problems, but check this out. This is realistic. Revenue is less than expense. That's bad. Think of your own situation. The amount of money I got coming in, my job, was less than what I got going out, my expenses. Remember, she used her credit card. Remember, she's got a big credit card balance, so that could be part of this. All right, net income, in this case, is going to be a loss, equals this one minus this one. Revenue minus expense. We're going to have a negative amount here. There's some formatting going on. That's why you see the 665 in red and a negative sign. We could change that around. I am not. I'm going to leave it. Over here, net worth is impacted by income or loss. Honestly, this comes up later, but I want to show you how this all fits together. So we've got a net loss. Net loss has a negative effect on equity. I'm not sure why that went bold, but let's unbold it. So we've got opening is going to be decreased by net loss to get an ending balance. Net worth or equity increases on the right side. So this is the increase side, and this is the decrease side. Since we got a net loss, it's decreasing on the left. If we had a net income, it'd be over here. Net income and how much, and you'd add it. But this one's a loss, so we got this, subtract this to get to this. An ending net worth then reconciles or ties out, and that's how it reconciles or ties out. When we get going and we're looking at businesses, we're going to see net income or net loss, and we're going to see owner withdrawal. We're going to see how much did the owner take out of the business. So that's it for the totals here. I don't like this, and it'll just take a second. I'm going to click on that, and I'm going to click up here to currency, and I want to show you something right here. This little kind of expanded thing. You can see all these options, and I like this one. So I'm going to pick red. I don't want any decimal places, but I like the, like in brackets, parentheses, negative. So you have lots and lots of control in Excel, how things look, all of your work, all of that good stuff. So let's go back through what we did here. We took opening balances, and we looked at this set of accounts for this individual, and we did a little kind of preliminary work just to kind of scope it out, like who is this person and what do they have, and let's get those opening balances in there. And we did a little bit of kind of self-checking work to see, yep, assets equals liabilities plus equity, and opening balances are all good. And then this is really the heart of the problem, are analyzing and recording the transactions. So we did that. So one by one we went through each transaction, and we found which accounts to record and which sides to use. Is it an increase or a decrease for this account for this transaction? And then with each transaction, we're checking to make sure left side equals right side, left side equals right side. And then to wrap it all up, we've got the totals. So we've got account totals as well as the total totals by category here at the bottom. And there was that little extra move where we're saying, oh yeah, we got net loss, and net loss affects net worth. So really our ending net worth is this number. And for those of you in my classes, just know I'm pretty open about net worth in this early chapter as we get going. And some of that's what you're seeing in the textbook as well. So that's a chapter 1 personal financial accounting transaction analysis. Just getting going, kind of practicing with the accounts and getting going with all of that. keep in mind if there's anything I can help with. I'm trying to find my little button. Here we go. And thanks for being a part of things today.